SpaceX was the big news, both on the IPO front, but also from the bond market front. So, headline, just to read it out for everybody here: SpaceX hits bond market for $25 billion. Matt, take it away.
Okay, so Monday this week, we had the large debt deal placed in U.S. dollar investment grade credit markets from SpaceX. That came, within 6 days, 7 business days of the massive IPO, biggest IPO in U.S. stock market history, where the company raised $87.5 billion. Right, so massive cash liquidity buildup, if you think about it that way. Um, and then this week, we saw the company in a five-part deal tap credit markets for an additional $25 billion. So we've been covering this story where that AI buildout would increasingly begin to consume capacity in the US dollar investment grade credit markets in the years ahead. Um, this is just a reflection of that process continuing to build up steam. But like this trend is in full swing as this AI build out continues. Just it's going to not just count on the capital markets deals we saw in the past. It started out as venture equity, private markets fundraising, that type of thing. 2025 was the story of the related party transactions where, say, company A would sign on to some like a revenue deal, future obligations, and then exchange that for equity shares in company B. We've moved on at this point. Now we're going to IPO route. That's out of the gate. SpaceX started that, and now we're into that credit market capacity taking as well. So you can see the top 8 deals in U.S. dollar investment grade markets in the first half of this year. 7 out of the top 8 are all the large cap names involved in this AI trade. Everybody except for Abbott Laboratories on number 8 for $20 billion dollars. So, and then in the big picture, in terms of issuance for new money creation and U.S. dollar IG credit, June of 2026 is within $2 billion of the record high, which was set in June of 2020 for fundraising. So remember, that was in the post shutdown QE, fiscal spending, CARES Act, bonanza, money printer deluge, all of that of the COVID era, right? June 2020, we're already like we're going to set the record. We have 3 more business days. We got to do one more, small deal, and there will be 1 or 2 or more that go off on those calendar days, Monday and Tuesday especially. So expect US dollar credit markets and the investment banks to put up a new record fundraising month for capacity and investment grade credit. So the next thing I want to cover, the use of proceeds for the SpaceX debt. So remember, they pulled 87.5 billion. They have a giant cash hoard now, which is going to come into play. We'll talk about credit markets and everybody's rush to raise dollar liquidity for whatever's in front of us. More on that to come. But the use of the proceeds from this, 5-part debt deal this week actually went to pay off a bridge loan from the same investment banks involved in, book running for this week's deal, the 25 billion. It like that bridge loan was actually to pay off higher yielding loans involved in, prior debt accumulated by X and XAI. So this is a story, if you think about it, of corporate strategy, buildup of this Elon Musk, related project behemoths, like touching on, the satellite launches, rocket, what's the technology like the recoverable landing, all yeah, all of that. It's all you can see this thing building up. This is a story decades in the making, really, if you think about it in the big picture. But this specific debt offering, the 25 billion, most of it was already spoken for. It's basically a transfer, a rollover of your old debt for business decisions in the past, and now we're slowly starting to tap the U.S. dollar investment grade credit markets. Note that time was of the essence here, and you can tell that because of how they raised this debt. So they went for the 144A and Reg S offerings or elections for these offerings. What that means is you don't have like the formal SEC registration. Like you didn't go through the process of like a public bond market prospectus or all of that documentation and approval behind this offering. They went for like a fast track election, the 144A. So for onshore regulated entities, essentially what you're doing is you're limiting your addressable market of dollar capital coming into $100 million or above balance sheets. So think about who would be buying these bonds. It'd be like banks, asset managers, pensions, um, insurance companies, et cetera. But like small mom and pop accounts who might buy a public bond offering, they would be limited, assuming that the account hasn't met those criterias and checked all the boxes for 144A eligibility. And then you have the Reg S component, which is for offshore, similar type of balance sheets and clients being able to deploy and raise from. So it's purely like a regulatory kind of exercise, but it is an election that or a choice, if you will, that is locking you into which pools of capital you can pull from. But what we saw here, right? This thing was massively oversubscribed. There was plenty of capacity to raise this 25 billion that SpaceX needed to then pay off the bridge loans, which were coming directly from the balance sheets of the five investment banks who were supporting this deal. So, um, key thing here right now, these bonds do not have future registration rights for a conversion to like public debt offerings, kind of like a conversion, right? Which is important because they're not yet like these bonds aren't eligible for inclusion in the Bloomberg US aggregate bond market index, which is kind of everybody's proxy for bond market returns, right? So there's
Right.
even a bigger boss that these could tap into. There's a whole nother pool once they flip over from 144A and Reg S to the public debt offerings. All right. So yeah, you can slowly see all of the Elon Musk led side projects starting to roll up into this like behemoth. And then that thing is the vehicle to fund all of this stuff, the satellites, the AI, uh,
Yeah.
Tesla, robots, all the,
I
like it's
saw
all
there's talk
coming
on
towards one
Tesla
thing.
too, and I think that one seemed like there was some more nuance to it just because of the structure. I think Elon doesn't own as much of it, things like that. But yeah, I mean,
Mhm.
tucking everything into one kind of thing that Elon is effectively the full owner of is an interesting, new development. I feel like for in the world of finance.
So he's our modern day version of Howard Hughes is how I kind of think about it.
Yeah.
All right, if you're trying to put this to historical proxies. All right. So the SpaceX bonds making up this five-part deal. So you've got different maturities, right? You got like a 5 year, a 7 year, 10 year, et cetera. Um, Notably, they were rated triple B by the ratings agencies, and then their peer group, they put them in the communications category. Um, so if you look at the spread they paid here, they did come to market at a fat spread. Like they paid a big concession as a new issuer themselves. Like this is SpaceX's first offering, as far as I can tell. In it's not even public bond markets, but first tap for investment grade dollar credit markets that I'm aware. And they paid an extra 40 to 60 bips of concession over what Bloomberg puts or plots out for their interpolated curve for their peer group, triple Bs, um, communications sector on the red line, and then you see triple Bs for U.S. corporates overall. You can see communications pays a slightly higher spread than the rest of the investment grade issuers. SpaceX came in. This is kind of to be expected. Brand new issuer, financials, all of that. Everybody's starting to get comfortable with this business model. Will it play out? Will it not? All of that. But there was a wide concession here for this first offering. So as an issuer, you're hoping that that compresses over time, but this is something that takes multiple years for this to play out. Like we just went through this are very similar development. Like let's say like Netflix, like everybody, Netflix has been a part of your life if you're an American, household for it feels like 20 years now, right? First time you were
Yeah.
streaming, and when was the last time you went to Blockbuster and picked up a actual physical DVD, right? 20 years ago, right? But it was only like a recent phenomenon where Netflix kind of did like made that same changeover from a high yield issuer to an investment grade issuer, and then that same thing, a 144A Reg S issuer to a public bond offering issuer, and then you're just starting to get comfortable with inclusion into the Bloomberg US aggregate index. We've seen that with all kinds of technology names lately, Uber, Meta, et cetera. So SpaceX is just beginning its own journey through that process. But yeah, what it's actually reflecting here is just that need for dollar capital for what's in front of us is how I kind of view it.